The information in this podcast is general information and not advice. Stanford Financial is authorised under Australian Credit Licence Number 541480. Further information is available at stanfordfinancial.net.
Hello and welcome to On the Couch with Steve, a podcast where we help you navigate the often complex world of buying and selling real estate. I'm Steve Athanates. I'm the owner of NG Real Estate here in Ipswich. We're obviously going to discuss the latest Reserve Bank of Australia announcement. We'll talk about that in a sec. Today we're joined by our great friend Steve Beach from Stanford Financial. Hey Steve, how are you, man?
Good, thank you.
Lovely.
Great to be back.
Lovely. So we're going to talk about the Reserve Bank announcement. So obviously without any further ado, what happened?
Well, some great news. They put the rates on pause, so yay.
Yay!
So cash rate does remain at 4.35%. So some benefit of that is, we shouldn't see any sort of rate rises, not only in this month, but again, the RBA don't actually meet in January. So the next meet is actually February. So will actually be a 2-month reprieve on any sort of cash rate movements.
So somewhere around February 4, nothing's going to happen between now and then. So obviously we get through obviously Christmas, the New Year, into the start of February before anything else can happen. Obviously, Reserve Bank will meet again somewhere around the 4th of February 2024. But the good news for everyone at home, okay, you get to save some money, stash away that while you can. We'll talk about some strategies as we go through about what you can do to help consolidate where you're at. But the amazing news is rates are on hold. What did we say was going to happen?
We both predicted on hold. So
wow, we are so clever. Hey?
Picked most of them.
Pat on the back to you, mate. Very, very good. But like at the end of the day, the good news is that obviously what we're talking about is extremely factual. It's obviously designed to help everyone out there who's in this world of buying and selling real estate. Obviously, we try and cover as many bases as we possibly can. But I hope everyone at home is obviously finding this extremely factual and helpful. We want to help you. So, mate, all right, we've talked about it. It's on hold. Why? Why did it stay on hold?
I guess probably won't dig too much into the global economy, but everyone else has sort of peaked outside of Australia from most of the central banks. But the big factors that predetermined was one, inflation went from 5.6 down to 4.9.
That's awesome.
So it's definitely heading in the right direction. They were anticipating that it was going to be 5% last month. So it was a little bit higher. That's why they lifted the rates. Reading some of the articles and a couple of the sort of journalist articles out there, all talking about, did they actually raise rates too early? It's definitely got the impact that they wanted, but they're still talking about that slow trajectory, making sure that at the end of 2024 that we have an inflation rate between sort of 2 and 3%. So.
Now, obviously, we've got a little complication in there called Christmas that's on the way. So that will naturally always spike. So we will see a slight rise in inflation, and that's why the Reserve Bank's not meeting in January. Is that correct?
That's correct. So, and they also can then get a full quarter of I guess, inflation data or CPI data. So why, the February meet is always really important, because they have been able to gain the entire year's worth of data, analyse it. They've got a lot more time to come up with some strategies and goals to make sure that we have that soft landing into that inflationary rate that they want. But again, I guess they did talk about, yes, rates have peaked, inflation has peaked, and everything along those lines. But they haven't said that we're completely out of the woodwork yet. But I'm still, again, we always do predictions, but I'm still under the belief that I think rates will stay on hold for a while now.
Look, I've spoken to a few different people in different sort of levels of banking and stuff as well. They did say we would get one more, which we did. But they're feeling that there may not be any more either. So I'm starting to lean towards February. We may not have another rate rise, but we'll discuss that a little bit further. The other topical part of this and what's influenced the Reserve Bank's decision is unemployment. Now, in the past, we've talked about the fact that, believe it or not, they actually wanted to see unemployment levels rise, which would effectively mean some people sadly would lose their jobs. That's just starting to happen. So tell us why were they hoping for that to happen?
I guess, a big predetermining factor as well is immigration. So there's a lot more people coming into the country as well and finding jobs and everything along those sort of lines. So with unemployment, there's ultimately more cash flow in the economy. So more cash means more expenditure, which means pushes up inflation. Similarly with bringing in immigration as well, so more people in the country means there's more money to spend as well. So all these factors come into, I guess, consideration across the board. Unemployment, I guess they've always wanted it to situate around that sort of 3 to 4%. We've seen unemployment rates of around sort of 2%, and it's slowly starting to increase up to that level.
Yep.
And that was always going to be a factor of as we spend less, and a lot of that's to do with sort of more casual employment. So people just sort of, there's not enough shifts around. So where I think we spoke about sort of 6 or 7 months ago that basically part of one of the RBA articles was they want to see people do more essentially for less, which is not a great thing, but
it's not likely though, is it really?
No. So
people aren't going to want to participate in that sort of model, clearly. But yeah, I understand what you're saying. Now, mate, I know we're always bound by time, but the other factor that is obviously affecting, I guess, the economy is house prices. Now, mate, they keep going up.
We're not seeing this market crash that everyone keeps talking about.
No. Well, we obviously had a lot of podcasts about it. If it did happen, maybe we'd see it drop somewhere in the 5, maybe worst case scenario 10% range. REIQ, anyone else who was smart was saying, okay, we could get this and it could happen. What we're actually seeing is that house prices on average, even this is across Queensland, which is the best performing state in Australia, house prices on average are going up around 3% a quarter. So we talked about this, I think, last month, where we were saying even if you bought a house in the last 12 months and you just sat on it, you're probably 12% richer than you were a year earlier for doing nothing other than the fact that you bought a house.
Getting in the market. And it's funny, it's something where we get asked quite a lot, and again, we can't give financial advice, we can give credit advice, but a lot of people ask me, Steve, when do you think is the best time to get into the marketplace? And I've always said the same line over and over again, when you can afford to. I think the best time to get into the property market is like now, when you can, so if you are able to. So and that's, we're seeing a lot more family guarantees as well at the moment. So where sort of young kids don't have enough deposit to get into the marketplace because property prices keep sort of jumping up. So some people are getting pushed out of the first home guarantee, first home loan deposit scheme thresholds. So we're now utilising mum and dad's equity in their property instead of the government guarantee side of things. So
well, look, I think it's interesting times. Obviously, we're in December 2023. We're coming, it'll be 2024 in about 3 seconds. So obviously the predictions moving forward, and we'll obviously cover this in depth as we go through podcasts next year. What's going to happen with house prices in 2024? Now, you mentioned you should buy when you can afford it. All the experts, and I'm not including myself in that bracket, but the experts are saying that they still continue to believe that house prices will continue to rise in 2024, which means if you can afford a house today, you should buy one, okay, because chances are they're going to be more expensive. You need to go along and see a gentleman like Steve at Stanford Financial. He'll help you out with all your buying needs. So, but the moral of the story is that everyone's basically predicting house prices will continue to rise.
And that's purely supply and demand. There's less supply and a lot more demand. So even in my local area, I live down the Gold Coast. So as real estate agents, constantly saying, "Hey, Steve, are you thinking about sell? You're thinking about selling?
Please sell."
We've had the 3 auctions, the couple of houses down around the road, and it's like very similar to your house. These buyers are ready to buy. Are you considering selling? And I'm like, maybe. If I got the right price, and those sort of I guess thought processes is what's pushing the market up. It's because I don't really want to sell, but hey, if someone offered me the right amount of money, I'd sell.
And what he means by the right amount of money is a stupid amount of money, and then he would gladly sell. That's what you meant, isn't
That's
it?
what I mean, yeah.
Yeah, well, look, I'm conscious of our time. Now, it's prediction time. We're coming up. We're projecting into the future. February 4, 2024. What's the Reserve Bank going to do then?
I still think they're going to hold.
I'm going to second that motion. I think they'll hold again, just to see what happens. Depending on how bad the data is, we'll see what happens after that as to what we predict. But I think they'll leave them on hold in February as well, unless some major economic catastrophe occurs between now and then. But my prediction, same as yours, mate, interest rates are on hold in February 2024. But I want to thank you for tuning in to On the Couch with Steve. Once again, mate, very special thank you to our great friend, Steve Beach from Stanford Financial. Absolute wealth of knowledge. Now, if you'd like to see more information about what we're talking about here on the Couch with Steve, you need to subscribe to the link below. Please come and join us. Our following is going through the roof because we're very smart gentlemen. I don't think so. Steve is. I'm a bit of a goose. But then they tune in for more, and we'll see you soon with On the Couch with Steve.